Business Report.
Good evening. Tonight, unlike the COVID-19 crisis, Sri Lankan economists predict that Cyclone Ditwha will have a significant influence on the country's economy. Sri Lanka will launch its long-delayed visa-free entry for 40 countries in January as tourism authorities work to boost a strong winter season recovery and accelerate post-cyclone recovery efforts. With the All-Share Price Index ending at 21,594.86, up 97.78 points or 0.45%, Sri Lanka's stock market recorded slight gains today. And as investors anticipated a possible interest rate drop by the US Federal Reserve later this week, Asian stock markets stayed mostly range-bound on Monday.
From Studio 24C, here's Prashansa Gunawardena.
Good evening and welcome to the Nightly Business Report on Other Derana News Channel. Sri Lankan economists believe that Sri Lanka's economy from Cyclone Ditwha will severely impact the domestic market unlike the COVID-19 crisis. Chair of Business Economics at the University of Colombo, Professor H.D. Karunaratne, speaking to Mahesh Johnny on Get Real today, said that COVID-19 impacted the external income, which Sri Lanka has no control over, while Cyclone Ditwa's impact will be in the domestic front, meaning that the government must take control to close the budget gap.
According to preliminary figures, Cyclone Ditwa's impact is calculated to be within 6 to 7 billion US dollars. Speaking on Get Real, Professor Karunaratne said that the only way to overcome the challenge is to ensure that economic policies are geared towards growth rather than consumption.
The situation is that the government introduced a large package of money where if they can manage with the unspent part of the budget, or if they can manage with the foreign currency coming to us, it is okay. Unless if the government expenditure going higher and higher because of crisis, then the revenue will not enough, then there can be again the budget gap in future, growing budget gap. Usually any economy has two gaps. One is external gap, the other one is internal gap. Internal gap starting from the government revenue minus government expenditure. So the government expenditure, of course, we have negative budget gap. All the time we have a budget gap. Yeah. So that will affect if the government expenditure increasing large amount, but the revenue will not increase. But the better thing that we had a very good revenue growth with the hope of this increasing taxes. The only thing, if the economy is not doing well, you can't keep continuously that same amount of tax.
Sri Lanka's Export Development Board says it will launch a relief and recovery program to minimize the disruptions to export operations. The agency has also begun assessing the damage to exporters affected by Cyclone Ditwha. According to the EDB, the measures aim to ensure a steady flow of goods and services to international markets. Efforts are underway to mitigate the impact on production capacity and restore disrupted supply chains. The EDB is also coordinating with customs, port authorities and logistics providers to address infrastructure restoration delays and speed up export clearances. Sri Lanka will implement its long-delayed visa-free entry for 40 countries from January as tourism authorities push for a strong winter season rebound and seek to accelerate recovery efforts after the impact of Cyclone Ditwha.
Sri Lanka Tourism Development Authority Chairman Buddhika Hewawasam said the move is expected to play a key role in revitalizing tourism as the country works towards economic stability and post-Cyclone Ditwha recovery. Industry leaders, including THASL President Asoka Hettigoda, had earlier urged the government to implement the scheme immediately using emergency powers. However, Hewawasam said legal complications prevented such an approach, prompting the government to seek parliamentary approval instead. He added that the list of eligible countries will be reviewed every 6 months with potential expansion if the initial phase proves successful. The visa-free initiative has faced repeated delays since Cabinet first approved it for 35 countries in August 2024, later expanding the list to 38. Implementation stalled largely due to a Supreme Court interim order suspending the VFS global visa outsourcing deal, leaving immigration processes unresolved.
Let's take a short break now. This is the Nightly Business Report. Welcome to the Nightly Business Report. Sri Lanka stock market saw modest gains today, with the all-share price index closing at 21,594.86, up 97.78 points or 0.45%. The S&P SL20 edged slightly higher by 1.01 points, closing at 5,926.64, a 0.02% increase. Market turnover reached 2.84 billion rupees with a total share volume of 83.2 million. For further insights on this, we have Salama Sanun from First Capital Holdings.
Thank you, Prashansa. The Colombo Stock Exchange started this week off on somewhat of a positive note, although trading activity levels were subdued, resulting in a lower turnover. The all-share price index gained around 98 points and closed at 21,595. The market opened on a positive note with some bargain buying, but this momentum broke off after midday, where the index saw a gradual decline but managed to maintain its position within the green zone. The key positive contributors for the day were Colombo Dockyard, Richard Pearis and Company, Sampath Bank, People's Leasing and Company, and Hemas Holdings. Both high net worth and retail investor participation remained low today, resulting in a daily turnover of around 2.8 billion rupees, which is 41% below the monthly average that stands at around 4.8 billion rupees. The capital goods sector accounted for 31% of total turnover, while the banking and materials sectors contributed a combined 33%. The top three price gainers for the day were Industrial Asphalts, Tess Agro Voting and Colombo Dockyard, whereas the top three price losers were Samsung International, Tess Agro Non-Voting and Onali Holdings. Thank you.
Sri Lanka stock market is expected to show cautious gains this week, with investors monitoring economic indicators and corporate earnings. Analysts anticipate moderate activity in blue chip shares, while market sentiment may be influenced by global trends and monetary policy updates. For further insights on this, we have Akna Thenakon from First Capital Holdings.
Thank you, Prasansa. The Colombo Stock Exchange enters the week on a cautiously stabilizing note after a sharp decline last week as investors reacted to the widespread economic disruption caused by Cyclone Ditwha. The cyclone's impact on infrastructure, supply chains and key industries triggered broad selling pressure, reflecting concern over how deeply business activity may be affected in the near term. Today, however, the market showed the first signs of recovery as trading sentiment improved slightly, with some investors positioning for a potential short-term rebound while others remained on the sidelines. Still, uncertainty continues to dominate the outlook. The full economic cost of the cyclone, the pace of restoration efforts, and the government support measures are all variables that could sway market direction in the coming days. As a result, the week's performance is likely to remain mixed, with the CSE balancing early optimism against the broader ambiguity surrounding Sri Lanka's immediate economic recovery. Thank you.
Gold edged higher today as a softer US dollar and rising expectations of a Federal Reserve interest rate cut supported the metal. Spot gold rose 0.3% to $4,212.70 per ounce, while US gold futures held steady at $4,241.30. The dollar hovered near one-month lows, making bullion more attractive to overseas buyers. Analysts said the recent core PCE data reinforced expectations of a rate cut this week, boosting gold sentiment. KCM Trade's Tim Waterer noted that the anticipated policy easing is keeping the dollar subdued while giving gold room to climb. Meanwhile, US economic data showed moderating consumer spending and a steep drop in private payroll, signaling softer momentum heading into the fourth quarter. Oil prices hovered near two-week highs as investors anticipated a likely U.S. Federal Reserve interest rate cut this week, boosting expectations for stronger economic growth and energy demand. Brent crude rose 0.14% to $63.84 a barrel, while U.S. West Texas Intermediate gained 0.13% to $60.16. Markets are pricing in an 84% chance of a quarter-point Fed rate cut, according to LSEG data. However, analysts note that policymaker disagreements could make this one of the most divisive Fed meetings in years, sharpening investor attention on the bank's next steps. Geopolitical risks also supported prices as tensions strengthened oil supplies from Russia and Venezuela. In Europe, Ukraine peace talks showed little progress, with major disputes unresolved and US and Russian officials holding divergent views on the Trump administration's proposal. The Sri Lankan rupee strengthened slightly against the US dollar at commercial banks today compared to last Friday. According to commercial bank rates, the US dollar's buying rate fell from 303 rupees and 50 cents to 303 rupees and 25 cents, while the selling rate declined from 312 rupees to 311 rupees and 75 cents. Let's take a closer look on how the Sri Lankan rupee is performing against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Hella Apparel Holdings PLC is moving forward with plans to secure up to 4.4 billion rupees from strategic investor, aiming to stabilize its balance sheet after reporting widened first half losses.
Shareholder approval for the proposed capital infusion has already been secured, with the funds expected to materialize in the second half of the financial year 2025-2026. Showing a consolidated loss of 4.1 billion rupees, up from 2.98 billion rupees the previous year, the group revenue fell to 32.3 billion rupees from 42.98 billion rupees. The group has made progress in restructuring 15.1 billion rupees in bank borrowings into a 9-year term loan with a 1-year grace period, following a 1.6 billion rupee rights issue in October 2024. Details of the recovery plan were revealed alongside the delayed 2024-2025 annual report submitted after a Colombo Stock Exchange warning. Despite auditors issuing a disclaimer of opinion due to net liabilities and overdue payables, the board remains confident that the capital raising and debt restructuring will support the group's turnaround.
Ceylon Bank PLC has entered a strategic partnership with the Central Depository Systems to enhance investment access for non-resident investors in Sri Lanka. The collaboration, formalized through a Memorandum of Understanding, allows individuals with inward investment accounts to channel investments into the country's capital market and repatriate returns with ease. Ceylon Bank aims to strengthen its role in supporting Sri Lanka's capital market ecosystem by offering efficient banking solutions tailored to international investors. The signing ceremony was held at the Colombo Stock Exchange, attended by senior representatives from both institutions. The partnership marks a significant step in advancing Sri Lanka's investment infrastructure, combining technological innovation with trusted banking services to attract global participation. Jetstar will launch Australia's first direct low-cost flights from Melbourne to Colombo, Sri Lanka, starting August next year, with fares starting at just $315.
Operating 3 times a week with over 100,000 low-fare seats annually, the year-round service will be flown using Jetstar's upgraded Boeing 787 Dreamliners, featuring more business-class seats, in-flight Wi-Fi and a new lie-flat crew rest area. The first of the refurbished aircraft is expected to arrive in Melbourne in late March 2026. Jetstar will open a 24-hour route launch sale today, offering one-way fares from just $315. The new route comes as the airline experiences a major growth phase, adding 20 26 routes and 13 aircraft over the past 2 years. Jetstar CEO Stephanie Tully said the Melbourne-Colombo route will provide Australians with an affordable and direct way to explore Sri Lanka. Melbourne Airport CEO Laurie Argus welcomed the flights, noting Sri Lanka becomes Jetstar's 10th international destination from Melbourne and enhances travel opportunities for leisure and visiting relatives.
InsureMe Insurance Brokers Limited officially marked its listing on the Empower board of the Colombo Stock Exchange with a bell-ringing ceremony. The digital insurance aggregator operates platforms including DGI, DigiMed and DGX, offering automated solutions for motor, medical and corporate expense claims. CEO Vipula Dharmapala noted that InsureMe has expanded through digitizing policy access, online claims and advanced automation solutions deployed locally and internationally. The capital raised from the listing will strengthen the company's base and support strategic growth, technology adoption, product diversification, and enhance digital services for customers. Janashakti Group was awarded the Parent Inclusive Workplace of the Year 2024-2025 at the Parent Inclusive Workplaces Summit 2025 in Colombo. The recognition highlights Janashakti Group's commitment to creating a supportive and inclusive environment for working parents. The company achieved the highest scores across all 5 award categories, including leadership initiatives, HR policies, workplace culture, well-being programs, and innovative parental support. It offers comprehensive parental-friendly policies such as full paid maternity and paternity leave, flexible work arrangements, and permission to attend family events. The company also provides career re-entry support, on-site child-friendly facilities, and programs involving employees' families to foster community and well-being. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets remained largely range-bound on Monday as investors awaited a potential US Federal Reserve interest rate cut later this week. Wall Street index futures were muted during Asian trading hours following recent weekly gains. Expectations of a 25 basis point Fed rate cut rose to around 85% amid signs of slowing US economic momentum. In Asia, Japan's Nikkei 225 was mostly unchanged, while South Korea's Kospi rose 0.3% and China's CSI 300 gained over 1%, though Hong Kong's Hang Seng fell 1.1%. Investor sentiment was also impacted by revised Japanese Q3 GDP data, showing a sharper contraction of 2.3%, though expectations of a near-term Bank of Japan rate hike remain intact. India's government is reviewing a telecom industry proposal to require always-on satellite location tracking on smartphones for surveillance, sparking opposition from Apple, Google, and Samsung over privacy concerns.
India is reviewing a proposal about greater phone location surveillance. That's according to documents, emails, and 5 sources. The pitch from the telecom industry would force smartphone firms to enable satellite location tracking. Tech majors, including Apple, Google and Samsung, have all opposed the move due to privacy concerns. Prime Minister Narendra Modi's government this week pulled back from forcing smartphone makers to preload a state-run cyber safety app on all devices. Activists and politicians had raised privacy worries about potential snooping. The Modi administration has been concerned for years its agencies don't get precise locations when legal requests are made to telecom firms during investigations. The current system only allows companies to use cellular tower data. That only provides an estimated area location which can be off by several meters. An email showed a leading Indian telecoms trade body proposed precise user location should only be provided if authorities order smartphone makers to activate AGPS technology. It would require location services to always be activated in smartphones with no option for users to disable them. Sources said Apple, Samsung and Alphabet's Google have told New Delhi it shouldn't be mandated. India's IT and Home Ministries are both analysing the telecom industry's proposal and didn't respond to Reuters' questions.
Inditex shares rose 8.5% after reporting strong third quarter results and November sales growth, seen as a key indicator for global fast fashion trends.
Inditex beat analyst forecasts for the start of its fourth quarter on Wednesday. The Zara owner reported currency-adjusted sales growth of more than a tenth in November. Inditex results are largely seen as a trend indicator in global fast fashion. It offers an early read for investors of how retailers got on during the key discounting season, including the important Black Friday weekend. The Spanish firm also reported strong third quarter results to the end of October. Sales were up nearly 8.5% to just over $11.4 billion, above analyst forecasts, while gross profit was up over 6% to $7.1 billion. The growth came despite unusually warm October weather in parts of Europe. That weighed on sales of higher-priced autumn and winter items, including jackets and coats. Inditex didn't provide a regional breakdown on Wednesday, but one leading analyst said Spain's strong economy may have given a boost to the retailer as it makes around a fifth of revenue in its home country. Inditex shares jumped more than 8.5% to a 9-month high in early trade.
Thank you for watching the Nightly Business Report on Other Derana News channel. We value your opinion. Share your thoughts and feedback with us through email at feedback.adncenglish@derana.lk or via WhatsApp at 07680579333. We will see you again tomorrow with the latest updates in the business globe. Vinuth Varnasuriya will join you next with Other Derana Sports Central. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.